One of the hardest decisions in a bull market is knowing when to take profits. It's easy to buy into altcoins when everything is pumping, but most investors make the mistake of holding them for too long. They ride the gains up, assume the price will keep going higher, and then they watch as their entire portfolio crashes when the market turns. The key to surviving the next bear market isn't just about making money now, it's about keeping it. And the way to do that is by rotating out of high-risk altcoins before the cycle shifts and moving into safer assets like Bitcoin, Ethereum, or stablecoins. But how do you know when to rotate and which assets should you rotate into? Well, today I'm going to break down exactly when to take profits on altcoins, how to spot the warning signs of an altcoin collapse, and whether Bitcoin, Ethereum, or stablecoins are the best place to store your wealth. Let's start with why timing your exit matters so much. In every bull market, altcoins go through the same cycle. Early in the run, Bitcoin leads the way. As Bitcoin gains strength, liquidity starts flowing into Ethereum. And then once Ethereum starts running, altcoins explode. This is what people call alt season or altcoin season. But here's where most investors get trapped. Altcoin season does not last forever. Eventually, liquidity flows back out of altcoins and into Bitcoin or stablecoins. The mistake people make is thinking that their favorite altcoins will keep rising indefinitely. They don't. Once the market turns, the majority of altcoins lose 80 to 90% of their value, and many will never recover after that. So, how do you spot the warning signs that it's time to rotate out? Well, one of the biggest indicators is Bitcoin dominance. When Bitcoin dominance is declining, it means money is flowing into altcoins. But when Bitcoin dominance starts increasing, that's a sign that money is leaving altcoins and moving back into Bitcoin. This happened at the peak of the 2017 and 2021 bull runs. When altcoins were at their highest, Bitcoin dominance reversed and started climbing. This was a warning sign that altcoins were topping out. Within months, most altcoins crashed 80% or more. Another warning sign is parabolic price action. If an altcoin is up 500 or 1,000% in just a few weeks, that is not sustainable, my friend. Markets always revert back to a mean. The bigger the pump, the harder the crash. If you're seeing absurd gains and retail euphoria is everywhere, it's probably time to start scaling out. Now, you also want to watch for liquidity drying up. If trading volume on altcoins starts declining while prices are still high, that means buyers are disappearing. This usually happens right before a major drop. So once you decide it's time to rotate out of altcoins, the next question is, where should you move your money? Now, most people assume the best choice is stablecoins, and in some cases that does make sense. Stablecoins like USDC or USDT offer price stability and let you preserve your gains without exposure to crypto volatility. But holding stablecoins is not a perfect solution, and here's why. Well, first, stablecoins are heavily centralized and controlled by institutions. USDC, for example, is issued by Circle, which has deep ties to traditional banking system. USDC can be frozen or blacklisted at any time, and they've done this time and time again. You don't believe me? Well, I sure remember. Do you? Do you remember when they voluntarily froze USDC that was tied to Tornado Cash? Even though there was never any official legal requirement to do so, if regulators decide to crack down, users could lose access to their funds without warning. There's also the growing concern that USDC is becoming a soft version of a CBDC. We're already seeing governments and financial institutions pushing for digital dollar alternatives. If USDC becomes more integrated into the regulatory system, it could eventually function more like a government-controlled digital currency than a neutral stablecoin. Now, for investors who don't trust the idea of a centralized stablecoin, Bitcoin and Ethereum maybe remain strong alternatives. Bitcoin is still the hardest form of money in crypto. While altcoins collapse in bear markets, Bitcoin has consistently recovered in every cycle. Even if Bitcoin's price drops during a bear market, it has always come back stronger. Ethereum is another option. While it's more volatile than Bitcoin, Ethereum is the backbone of DeFi, NFTs, and layer 2 scaling solutions. Over time, Ethereum has gained more institutional adoption and continues to evolve with network upgrades. So, which should you rotate into? Bitcoin, Ethereum, or stablecoins? The answer really depends on your specific goals. If you want zero volatility and are looking to preserve capital, stablecoins are a good option, but you have to accept the risks of centralization, counterparty risk, and potential regulatory interference. If you want long-term exposure to crypto, but with reduced risk compared to altcoins, Bitcoin is the best option. It has survived multiple bear markets and continues to be the most secure, decentralized asset in the space. If you believe in the growth of DeFi and smart contracts and are willing to accept more volatility, Ethereum can be a strong alternative as well. But unlike Bitcoin, it still has technical risks, governance uncertainty, and more competition from other layer 1 chains like Solana, for example. A smart approach is to diversify your exit strategy. Instead of moving everything into just one asset, consider rotating a percentage into Bitcoin, a percentage into Ethereum, and a percentage into stablecoins. That way, you're protecting against both crypto volatility and stablecoin counterparty risk. The most important thing is to have a plan. Don't wait until altcoins crash to decide what you're going to do with them. By then, it's too late. So let's recap. If you're holding altcoins, watch for these warning signs: Bitcoin dominance reversing, extreme price pumps, declining trading volume, and retail euphoria hitting unsustainable levels. When it's time to rotate, decide whether you want to move into Bitcoin, Ethereum, stablecoins, or a mix of all three. Bitcoin is the safest long-term hold. Stablecoins provide short-term protection but come with centralization risks. And Ethereum offers growth potential but with added volatility. The key to success isn't just making money in a bull market. It's knowing when to walk away with your gains before the market turns. Now, I want to hear from you. How are you planning your altcoin exit strategy? Don't give away prices or don't overexpose yourself to strangers online. But do you prefer moving into Bitcoin, Ethereum, or stablecoins? Let me know in the comments. And if you want to learn more about how to navigate crypto cycles without getting trapped in the wrong assets, check out learningcrypto.com. It's the best place to get real, practical crypto education. Thanks for watching. I'll see you in the next video.